So let's have a look at your charts here. I love that you do the two shades of green on there. I know I see a lot of YouTube videos that do that, take that red-green thing away from it. I haven't quite gotten to that point yet. But share with us a little of what we're looking at here.
So I use a number of ICT concepts, but I wouldn't say that I follow any specific model. I've just taken a few of the things that he talks about and kind of developed my own system that I run.
Sure.
I know one of the first things that I do differently than most people I see online is I don't start with, say, a weekly, a monthly, a daily, and try to form a bias. Okay. I am not someone that trades with a bias. I find that I don't try to predict the market. I just try to position myself.
Okay.
So I mostly focus on the idea that he presents that the market only moves for two reasons. It goes to an inefficiency or it goes to liquidity. Right. So I try to frame the market. I use a 5-minute chart, try to understand where the liquidity is that it's going to be reaching for, and then I will use inefficiencies to get into my positions. So I tend to look back usually only a day or two in price. And I use the different sessions. I like to look at the Asian session, the London session, the New York AM, and the New York PM. So I'll be looking back anywhere from 3 to 4 sessions back from where we are. Okay. And what I want to see is where are those levels. So I trade a pretty clean chart. I just have a few indicators on here. I don't do a ton of annotations. I just like to know where are those highs and the lows of those sessions and where are we at in correlation to those. So a trade that I would have liked to have seen last night is here we ran the PM low from Friday, and we are no longer starting to see any new fair value gaps, any order flow beyond it. So that's where we'd look for a reversal off of this area. And so we ran it down here. Here's a little imbalance. So I'm like, all right, if I believe that this liquidity below the New York PM session has been run, and now we're going to go seek liquidity on the opposite end, where is an imbalance that it's going to trade back into where I can get myself a low risk entry and take that to the other side. So this would have been, a little imbalance right here. You can see we traded down into it, and then now we're heading back up, and I would have been targeting, the London high. Of course, this happened at 2 a.m. my time, so I didn't take it, but these are the types of things that I'm seeing. So just looking, what are those 3 previous sessions? What's been run? What hasn't been run? There's no really strict setups that I'm following. It's just entirely based off of those 2 concepts. Where's the liquidity and what would be a good low risk entry for me?
Now, for those that haven't necessarily listened to a whole lot of ICT, I know that there's different types of imbalances that one would look for. Obviously, you mentioned the gap in the bars. What constitutes an imbalance for you?
It would be a fair value gap or a gap from the close to the open of the next candle. So I use a lot of fair value gaps. So this would be an example of just an imbalance gap between these 2 right here, that it's run away from it. And then at some point, I like to see it come back, fill it in. Same thing down here. I also like to use a lot of inversions. So that would be if we form a fair value gap, like we did right here, and then we trade back through it, we close above it. Now this here was a fair value gap on the way down. Now we've traded back up through it. Now it's an inversion zone, and I will use that for an entry to go long as we tap back into it. You can see this time there was 1, 2, 3, 4 chances to get into that after a reversal. So this is one of my favorite trades right here, is we ran a time-based liquidity level. We printed one more fair value gap. It got inverted, and then it offered a few more entries on the way out.
Gotcha. Now, as you go through this process, what actually triggers an entry for you? Because I don't know if it's just the way that you have your chart set up, but it looks to me like there's a whole lot of gaps between these things that I don't see on a 5-minute, because I trade NQ as well, that I don't see on a 5-minute NQ chart. I'm not sure if that's just a settings thing, but when you go through this process, what actually triggers that entry? So you go into this inverted fair value gap. Are you going to take it on the first up bar, first 5-minute up bar? How are you going to structure your stops, your targets, and things like that?
Yeah, for sure. So first thing that I'm looking for is like, have we run a liquidity level? So it's like, yes, okay, we've run this one here. Now, are we going to continue to stack and move lower, or is there going to be something that's going to indicate to me a reversal? Right. So if I'm sticking on a 5-minute chart, here first, city, that was formed here, fair value gap on the way down. The next bar going to print another one. If it does, then I'll start to consider a move lower. But if it doesn't, and then now this has been inverted. So this bar right here closes. Now this area here I will call this my inversion area. And then now the first time after this bar closes that I get a tap of the top of it, I will just set my entry right here. So right on the top of this inversion, and I'll put my stop somewhere down here, and I'm going to target usually the next time-based liquidity to the upside. But one thing I'll say is, like, I spend a lot of time looking at the data of my own trades and what I've been taking. And you got to find, where do you fit? Like, what's your style, everything else. And I am a fairly low win rate on a per trade basis. I win about 30% of my trades, but I have a close to a 70% daily win rate. So I'm not afraid to take a few stabs at each of these trade ideas, because I do typically get somewhere between 7 and 10 R on my trades.
Wow.